Hello and welcome back to the Infinite Fire podcast, where we focus on financial independence through the practice of infinite banking. This is your host, Mr. Legacy, and I have a special guest with me today, Mr. Garrett Watson, a great friend of mine. He's been a friend of mine for many, many years. We've had so many financial conversations, introspective conversations, and today is going to be a continuation of that. So, thank you so much for coming on, everybody. Garrett Watson, and he has some questions for me, and I hope that we all can learn from it. Mr. Watson.
Thank you for inviting me. Looking forward to our discussion. I think it'll be definitely informative on more so. I mean, I'm selfish. I think it's just going to be informative on my end. So, one of the kind of just a couple questions. One a little bit. Let's talk a little bit about the infinite banking. Now, I will tell you that I understand it from my concept, but if you could give me a tweet, right, to if you were going to write a tweet about what infinite banking actually is, what would that actually be?
Um, it you know, I'm definitely interested in hearing your understanding of it as well. But if
Mhm.
I was just talking to somebody and I had to think of the first thing of like why infinite banking, I would say it allows you to take control of your finances,
Mhm.
recapture control of your finances, of your capital. And that's one of the things that, like I said, that drew me to infinite banking is the control aspect of it. So I think a lot in society we feel like we just don't have control over a lot of stuff, right? Things, it feels like things are happening to us more than us being able to steer the direction of how things are going. And that is that is very evident when we come to like finances. So the idea of putting something in place that allows me to recapture control, um, you know, it was something that drew me to it, and that's why infinite banking, and that's what I would say to somebody else like, what is the infinite banking thing? But I'll start with that. It is a method of recapturing control of your finances, and then I'd go from there.
Okay, so I mean, look at that a little bit when we talk about the how. So we got the why, I got the what it is, the method, but specifically looking at that method, from my understanding, and correct me if I'm wrong, but it's a way of utilizing your insurance policy, specifically the cash value of your insurance policy, that being your bank. And by bank, I say more so a place where you store value, you create value, but also a place where you kind of you borrow from.
Hmm.
And the infinite banking is this context of borrowing from yourself and creating value through yourself. So you run through you as opposed to going through Chase or Bank of America.
Right.
You go through yourself.
Right.
How does that, where does that line? What am I missing? What did I get right? What did I get wrong?
No, I mean that is a very apt description of I kind of like the process. But I want to key in on something that you said. You specifically mentioned um using your own funds to to grow this bank, to create value. My The argument is that you do it in the current system, you create that value, but you're not the recipient of it. So the point of starting an infinite banking account, infinite banking account or policy, is that you are the person that's the recipient of the value. What do I mean? Well, okay, if you know anything about banking, all banks, I don't care if it's Chase, Bank of America, Wells Fargo, all of those banks get their money from deposits. And you know who gives them those deposits?
You or
You, you,
oh,
me, all of us, our direct deposits when we're putting money inside the account. And then when we want to get a loan for a car, get a loan for a house, or even they extend us credit in the form of credit cards, it's basically their ability to loan us back the money that we gave them in the first place,
mm-hmm,
right? And then they'll charge us interest for it. And we clamor, we clamor and we do all this research and we jump from company to company based on these interest rates. But it's basically money that we've given them.
mm,
So, if so, and the differences between infinite banking and these outside institutions is the fact that when you're practicing infinite banking, you're the person that's getting the value back to you, which is that interest. You're gonna recapture that interest. You're gonna pay that interest, but when you're paying it, it's coming to you. The majority of it's coming to you. And
mm,
then you're gonna put it inside of a system that's gonna grow at a guaranteed rate, right? That's gonna grow at a guaranteed rate. So every time you borrow money from yourself or borrow money using your policy as collateral, you're going to pay yourself back with interest. And that interest is going to go to you in your bank rather than the outside bank. So that value is always created. What we're changing here is who is being able to be a recipient of that value.
mm. Okay. I mean, you gotta. I mean, when can you be more descriptive when you
Okay.
say when you're talking about the interest?
Okay.
Give me an example of like, how I could potentially be the recipient of the interest. I think that concept still seems a little foreign to me.
Okay. Okay. So just a quick little tutorial. So when you're borrowing money from your infinite banking policy, what you're doing is you're actually using the cash value inside of your policy as collateral. So even though you have a cash value, just for sake of easy numbers, we'll say $1,000. You're not gonna pull your $1,000 out. What you're gonna do is you're gonna use that $1,000 as collateral, and the insurance company is going to give you their $1,000. Now, of course, you're going to borrow money, so they're going to charge interest. Right now, the average interest is about 5%. So, what they're going to do is they're going to say, okay, you can borrow this money at 5%. And people are like, ah, man, I can get, you know, somewhere else, I can get it for 3% or 2% or 1.5%. Okay. But will somebody allow you to borrow money and then say, okay, just make sure you pay me the interest whenever you can pay the principal back whenever you feel like it? That's up to you. But just make sure you pay me the interest. 5% on $1,000 is $50 per
Mm,
year, right? So they're like, okay, but those are the terms you're not able to get. Somebody say, "Oh, just pay the principal back, whenever you feel like it." Nobody's going to say that, right? But anyway, that's what happens. And what we do in infinite banking, so back up, you're going to say, "Hey, I have $1,000 in my policy as collateral." The bank is going to give me their $1,000 and going to charge me 5% interest, which is going to be $50 per year. And then um what we always suggest and teach is that you put some more interest on top of that. Like me, you know, when I tell people 10%, whatever the insurance company is charging you, charge yourself double that, because all that extra interest is coming back to you, and you choose your payments. You're like, man, that's 10%. That's a lot of interest. Yes, but you determine the term of the loan, which means that you determine the payments in which you're paying that loan back. like I said, the only thing that you have to make sure that you pay back on a yearly basis is that $50.
Hmm.
So again, we're going back to control, recapturing control, right? So, you know, did that give you a good idea of what that insurance loan, that in loan type of process
Yeah, it,
goes?
it did. You know, one of the things that you kind of touched upon that I thought was interesting um, is is this concept of periods, right? I
Hmm.
mean, think about your mortgage. I mean, your mortgage is amortized on a say a 20-year term, right?
Hmm.
It's not really 20-year term per se as it is 240 payments, right? So every month, whatever interest rate that you will have is being charged, right? That's being assessed on the balance every month. So that's why, I mean, we actually recently refinanced and man, that they give you that breakdown that document says this is how much you're going to pay in interest. And it's just
Yeah.
like, ice.
Hmm.
So, I mean, the biggest thing is that, I mean, interest is being charged or being assessed on a monthly basis on the value. Um, Also, the same thing in the car loan, right? You're talking about simple interest, where
Hmm.
interest is being compounded daily. The thing I like I said, specifically about what you're referring to is about the periods, because the period is 1 year is a period. So
Hmm.
it's not like the interest is being constantly compounded
Right.
or even like a monthly or context, or even as in the context of a credit card, you're talking about even daily. So I think that part really it drove home to me. So that makes sense. So I appreciate that. So thank you for that.
Yeah, no problem. They actually use it. They actually use like the average for the year. So again, they don't look at it until the next year when it's your premium anniversary date. And your
Mhm.
anniversary date is the date in which, you pay premium for those that, pay on a yearly basis. Um, so they look at your policy anniversary date and then they go, okay, how much did they have out over the year? Okay, what was that average? Okay, what's 5% of whatever that average was? Okay, that's his amount. And why do I say that? I say that to drive home that we should treat this like a bank. You take money out, you pay it back, and it's advantageous for you to pay the money back. Cause why? One, when you're paying it back, the the average of the loan amount that you have is going lower and lower. So that means that that $50 can now look like 40. That $50 can now look like 20. It can look like 10 at the end of the year, depending upon how quickly you decided to pay that loan back. Right.
Gotcha.
So you could pay the insurance company less money in interest, but that extra $50, that 5% that you added on extra for you, that's going straight into your policy. So there's ways for you to do it. Again, you're in control of that.
Mm, I
You're
like
in
it.
control of that. Go ahead.
No, I like it, man. I like it. Um, so I actually have a follow up question, or I guess another question for you. So, um, taking a page from the Rich Dad Poor Dad book, right?
Love it. Great book, by the way.
Great book, great book. One of the things that he talked about is he's like, you know, don't have, or better yet, he's like, if whoever your financial advisor is, you want to know what are you getting your funds from, right? Where do you make your money?
Mm-hmm.
Um, I mean, granted, you're not a financial advisor per se, but from an investor standpoint, what
Mm-hmm.
do you see as your goals?
My goals as an investor. Um, big headline, more. No, but no, seriously, my goals as an investor is become financially free to the point where I can replicate um what I'm doing and have other people become financially free. Because I've always had these three goals. I've been walking around with these three goals in my pocket for about 6 years now. And it came to me one day, and everything that I do revolve around these three things. No matter what I'm doing, it's my same investment plan. It's my how to live my life plan. It's everything. It's three things. I want to achieve, build, and inspire. I know you've heard me say this before. You probably haven't heard me say it lately, but it's absolutely everything that I'm doing. I have not forgotten those words. I've written those words down. I have those words everywhere because I want to do those three things in all that I do. I want to achieve the goals that I set out for myself. I want to build, right? I want to build a legacy, right? They don't call me Mr. Legacy for nothing. I want to build a legacy for my kids, generations that I'll never see, but they'll see the fruits of my labor. I want to build those businesses. I want to build that legacy that um, I will change the trajectory of my family and those that I come in contact with, which leads me to number three. I want to inspire. I want to inspire others to do what I've done and more. I want them to take the small foundational pieces that I have and take it further. Um, and those are my goals, really, and everything that I do fits into those goals. So, circling back to why am I doing this infinite banking? Once I found out about it, I was like, this has to be something more. I mean, this has to be something that's shared. This has to be something that's practiced. This has to be something that I can I achieved it. I went in, did what I needed to do personally and get my own policy and things started. I started to build businesses and processes around this concept. And, right, what I'm doing now and what I continue to do and what I've done since I've stepped my foot in is inspire others to open their mind to this possibility and this system and this process, and open their mind and inspire them to understand that this is something that will change the trajectory of their family if they give it the opportunity. So all of my goals revolve around those three things.
Okay, I appreciate it. Appreciate it. Um, you know, so when you're talking about like um, just in this context of just thinking about legacy, and I think that we are in a very interesting time. I mean, I think our economy is in a very just it's a time that it'd be very interesting to see from a reflective standpoint. But one of the kind of markers of our time right now is as everyone's getting their Biden bucks.
I like that. Biden Bucks. I like that.
You know, talk to me a little bit about what do you think would probably be the best way for people to use those funds.
First, I would like to say, um, honest to if there's anything on the foundational level, it's some of those. Um, you and we talk about the hierarchy of needs a lot of times, right? And I told you a colleague of mine brought to me this idea of, things, people's growth level fitting into three boxes, right? Survival, efficiency, and you're exceeding, you're a superstar, right? So if there's anything in that surviving category that needs to be taken care of, so far as if food needs need to be attended to, if there are any housing needs that need to be attended to, transportation needs that need to be attended to, please take care of those first, you know, because those are foundational level things that need to be attended to before you can do anything else. You can't eat, if you're hungry, it's hard to think, right? If you don't know where you're going to sleep the next day, it's really hard to not have anxiety throughout the day, so make sure those things are attended to. So if those things are attended to, then I would go to, is there any debt that I need to clear out? Any type of debt, like debt that it's hard for me to clear out. And I say that because I know we talk about this a lot, but these days are not going to last always. And what days are those? Days of rent moratoriums, days of, stimulus checks, whether it be for a company or a personal person, you know, those days are not going to last always. So there's some people out there, that they're just playing, I guess I call it debt roulette, right? They're not seeing what they can get away with not paying for, because a lot of companies are being they're trying to be understanding during these times. But if there's something that you can pay off or pay down or get to a level of, understanding with them, with this money, I would do that, right? But if you've taken care of those foundational needs, if you're like, what, my debt situation, it's good, it's taken care of, you know, no, I'm good on that. Then to me, the third one, and I feel like is the most powerful one, and I think we're just gonna jump straight up to the third level, which is, let me put this money somewhere that's gonna put me in a situation, or may put me in a situation to never be able to qualify to get a stimulus check,
Mm,
right? Because what's the cutoff for stimulus checks? 100,000, something like that.
yeah.
About like 100,000 if you bring in about 100,000.
I feel like you do like 175. I don't know. I just keep checking the mail.
Right? But I think that's the biggest one. Put yourself in a position that you don't qualify for a stimulus check anymore, right? That um that instead of looking for a check, you're putting checks in the mail.
Mm,
And I think that's not just buying stock. That's not just starting a business. That's not just, starting an e-commerce store. I think that goes to education as well. Investing in your education, like, hey, again, something's always going to happen. Something catastrophic is always going to happen. How do I put myself in the situation, in first the mind frame, but then the financial situation, to be able to um, come out, not only in the situations, come out unnegatively impacted, but actually I've thrived during this time. And we've talked about this today, the fact that there's been so many millionaires made since COVID began. There's gonna be another COVID, right? Because I'll say this: COVID is the new Katrina, right? Devastation. There's always gonna be that, like that next big thing. How do we put ourselves in positions to not even qualify for that? I think it starts with the education. You mentioned a solid book, man. You mentioned a solid book, Rich Dad Poor Dad, which I did not like when I first read it in college, by the way. But I would, if I was somebody giving somebody advice, I would say if your foundational stuff is taken care of and your debt load is taken care of, I said start investing in your education to start opening your mind to put yourself in a position that when this happens again, right, it will be something. It might not be called COVID or the new strand that's coming down the pike, but whatever it is, you're going to be in a position first to recognize it and then, be able to put yourself in position to be on the positive side of it if there is one, but being able to make money through this time, not hurting during this time. And I would start like Rich Dad Poor Dad. I think that's more of an intermediary book. Like that's in the middle. I would start with my favorite book. Do you remember my favorite book?
Was it Richest Man in Babylon?
You doggone right, Richest Man in Babylon. I'd start with that one.
It's a classic. It's a classic. It's a classic.
Absolutely. It's a classic because it gives you everyday practical. And I love it's told in story form, but it gives you those foundational pieces of okay. Because people always go, I don't know where to start. The richest man in Babylon is going to tell you where to start before you get into the real estates, right? The real estate stuff for Rich Dad Poor Dad. I would start with the mindset and the simple step by step instructions that richest man in Babylon is going to give you. And then from Richest Man in Babylon, then I'd read Become Your Own Banker,
Mm,
right? By R. Nelson Nash. And, a book I read to learn more about infinite banking. Why? Because infinite banking is a way, because, okay, at the basic level of infinite banking is insurance, life insurance. Most people, again, if you're coming out of a situation where your basic needs were poorly attended to, the odds of you having life insurance is low. Private life insurance. I'm not talking about something that you might have through your job, because people don't realize once you don't have that job anymore, that insurance doesn't go with you.
mm-hmm.
So you get private life insurance. Why is that important? Well, think about it. You were just able to take yourself out of the situation where you were stuck in that survival mode. The last thing you want to do is pass on that stage, that survival mode stage, to your next generation, right? To your beneficiaries. So you're able to buy life insurance. So at least that if something happens to me, these people are going to start off with a lump sum of money that they can do something with, so they don't have to start off at zero. And then if you're practicing infinite banking and you get the process down, hopefully that's something that you're teaching your beneficiaries. So when it happens, because we're all going to die, but when it happens, they can fund their policy with that money, even more money, and they can continue that process of that process of infinite banking, which is letting you move off the food chain. And while you're doing that, then I'd buy Rich Dad Poor Dad, because now we have the capital and now we have the process of moving money in and out of my own bank account. You have
Gotcha.
capital, you got the process down. Now you can start buying your real estate. So that's what I would tell them. What do you think?
Oh man, I think that's very interesting. And I apologize if this is tangential, but I mean, even when you're explaining it, I realize that, um, the think the people who can who and I don't use this as a comparison, but the people who probably aren't spoken of, I guess, enough, is kind of the middle class, marginal middle class, right?
Okay.
So, I mean, initially we were talking about who qualifies for their, these Biden bucks. uh, and I mean, I would venture to say, even if it's 100,000, I would assume that whoever makes 101,000, I feel like they would probably need it just as much as a person who makes it 100.
Mm,
Um, and there really isn't much handout for those. But versus the person who makes it, a million, couple million,
mm-hmm,
I'm pretty sure they really don't need it.
mm-hmm.
So I mean, I think it's imperative if you are on that cusp to use this opportunity to really make a, I don't know, I would call it a stand or just something more. What you don't want to do is to, I think the mentality is a very important context or concept in this time. And those who have the opportunity to make something of this opportunity, I mean, of this situation, for good or for, just me, even for possibly for good. I think it behooves them to take advantage of that. So, no, it's a little tangential, but I mean, generally, what you're talking about, I mean, it makes perfect sense. I mean, you need to take care of your basic necessities, and once basic necessities are taken care of, it's imperative that you capitalize.
Absolutely. And I think, you made a powerful point, and I'm glad you brought that up. And it's funny, I don't want to go too political with our conversation, but um, a lot of the speaking points, right, when we're talking about politics, they're always mentioning the middle class. But it sounds like what you're saying to me is those are the exact people that are not being exactly helped with the stimulus because they don't qualify.
It's hard to really, to really to even hear their voice. I was reading somewhere about this concept of, I'm going to demolish it. This concept of binary bias, which is basically a bias towards labeling things in a binary context, right? Yes, no, 1, 0, is not. It has this. We want to look at people. I think naturally we gravitate, and especially politically, right?
Hmm.
It's either you're a Trump supporter or you're a Hillary supporter, right?
Right.
Either you're a Republican or you're a Democrat, and it's always binary. And the reality is that there are people who may see themselves as a Democrat, but do understand and agree with some Republican terms, and vice versa. But those middle of the road people, because they don't fit into this binary structure,
Hmm.
we don't really hear about them. And I think it's imperative to, as we progress as people,
Hmm.
and we realize that, hey, we're no longer binary, right? It's not
Hmm.
that we're poor, it's not that we're rich, we're
Hmm.
somewhere in the middle.
Yeah.
It behooves us to look at this as an opportunity to, take advantage of the opportunity that's in front of us. Um, yeah. So,
Absolutely. Absolutely. And let me let me touch on that and bring that back to infinite banking when you're talking about being either or, right? And when people think about, okay, do I build this infinite banking account or do I invest in the stock market? Right? Do I fund this infinite banking account or do I invest in real estate? You talking about people always thinking either or. Like if I'm winning, somebody has to be losing, right?
mhm.
But that's not true. Again, the beauty of infinite banking is the fact that you can do both. Go ahead, fund your infinite banking policy. Fund it, fund it, fund it, fund it as much as you can. But when you find that piece of property that you want to turn into a rental property, use that cash value to purchase it. So now what? You have the infinite banking policy and you have um, the rental property.
Mm.
Or if you want to invest in ETFs, anything, just stocks, go ahead. You want to play the options market. I said that for you. If you want to play the options market, all right, take the money out. And I always say the policy is a good hedge because you're never going to borrow more money than the death benefit is worth. Why is that important? Because if you were to die during the time that you're using still using that money out in the markets or whatever the situation is, you're still going to get a death benefit regardless. So if you get a if your beneficiaries get a death benefit, whatever you bought, whatever debt you accumulated, stuff like that. First of all, the loan from the insurance company is already paid off because they're going to take it out of the death benefit. But then you get whatever's left. They're going to get whatever left. Then they can take whatever's left, that other big chunk of money, that big chunk of money, and can pay off whatever that asset that you bought was. So again, because I look at it like this: if you buy $100,000 property piece of property, if that's one of your goals is to do that, or you want to have a portfolio, let's say worth $1 million. Okay, cool. Let's start a policy that's going to be at least worth $1 million, right? And you can put in, especially at that point, you can put in a lot of money towards your cash value and things like that. So, so now if something happens to you, if you die while you still owe some mortgages on those properties and it's cash flowing, because you're going to use the money from those properties to pay back the loan to your infinite banking account. But if you die during that time, guess what's going to happen? Your family's going to get a big chunk of money, and then they're going to take that big chunk of money. If you've instructed them correctly, they're going to take that big chunk of money, pay off that $1 million piece of property. So now they have a $1 million piece of property, free and clear of any loans, and they have the cash value coming from it as well. So now they have the asset and the cash value. But again, it's not one of those either or situations. It's both. But and that's why you speak to a person um, that's going to strategize with you. You're going to have somebody that's going to strategize with you and let you know, hey, this what are your goals? What do you want to do? What do you want to accomplish? How much do you think that's going to cost? How much do you want to be birthed? How much do you want this to be worth? Okay, well, let's build your bank around that mindset so you can achieve your goals. So
I like it. I like it. Yeah, man. I think it's a powerful concept. I think it's a really powerful concept.
well, Mr. Watson, I appreciate your time, man. I appreciate the questions. I would definitely have to do this again. Like I said, we talk all day, every day. Now
Hmm.
we're, now we're recording and putting out there so other people can be privy to these conversations. I really, really, really appreciate you coming on with me today. Once again, this is Mr. Legacy with Infinite Fire Podcast. We appreciate you coming out. We appreciate you listening. Until next time. Bye.